The world's top 10 stocks in 2022 are good news for investors. The smartphone market is about to explode, Hubble Bit Broker, Anson says. These four companies are positioned to rake in the profits. These companies have developed advanced economies of scale that will allow them to take advantage of this exploding demand while others can't keep up. Be sure to look today before all the good spots are taken. And now, without further ado. Number 1. Tesla Motors. Tesla is a US-based electric car company offering high-end luxury cars and utility vehicles with exceptional power, performance, and efficiency. In 2 years, the stock has skyrocketed by 15%. That's twice as much as Apple's growth during that period. In its roadster model, Tesla has demonstrated an advanced economy of scale that allows it to price its cars at a premium and achieve excellent margins. The success of Tesla's stock can be attributed to Elon Musk's vision and the rapidly escalating demand for electric vehicles. It recently announced plans to take on heavy-duty trucks and other larger vehicles. With the demand for electric cars set to explode in the coming few years, Tesla remains a fantastic choice for investors. Why should you invest in Tesla? Technological demand for Tesla's electric cars is skyrocketing. With more nations taking steps to promote greener transportation, demand for the company's cars will skyrocket in the long term. The market is rewarding Tesla with a high price-to-earnings ratio of around 100. Nonetheless, with an increasing number of investors turning to electric vehicles, this stock is expected to skyrocket in the next 5 years. Number 2. Advanced Micro Devices. The semiconductor manufacturer has grown its revenues by 10% per year for the past 5 years, while maintaining a gross margin of over 40%. Advanced Micro Devices' meteoric growth has been driven by the exploding demand for GPUs in gaming and cryptocurrency mining. Advanced Micro Devices is also riding on its success in the console market with Microsoft's Xbox One X. The company produced the chip powering Microsoft's latest console, positioning itself to benefit from increased demand for high-end PCs. Advanced Micro Devices is exposed to market price volatility of the cryptocurrencies it produces GPUs for, as with many hardware manufacturers. Nevertheless, its rapid growth and strong position in several sectors make it a great investment opportunity. Why should you invest in Advanced Micro Devices? Gaming and cryptocurrency mining. For investors looking to get into hardware stocks, Advanced Micro Devices is a top choice. With its share price doubling in 2017, the company is set to make a big splash in the semiconductor space. Advanced Micro Devices currently trades at around $125.77 per share. That's 3 times more than $27 reached in 2014, but it's still far off from where it was trading 5 years ago. With more demand for GPUs expected in both gaming and cryptocurrency mining, Advanced Micro Devices is likely to rebound in the long term. Number 3. Microsoft. Microsoft has transformed itself into an all-around technology company specializing in servers, software, and gaming consoles. Its Windows operating system powers over 90% of computers worldwide, while its Azure cloud service controls around 40% of the market for public cloud infrastructure. In 2017, Microsoft achieved a milestone of over $100 billion in yearly earnings. The company is consistently profitable and has made tremendous strides in growing its cloud business. Last year, it reported revenue growth of almost 50% for this segment, driven by Azure's massive success. Microsoft is also making huge investments into research and development, trying to stay on top of the technological curve. Why should you invest in Microsoft? Strong growth with a share price growing threefold since 2014, Microsoft is one of the best performing stocks on this list. The company's transition from a PC-focused business model to a more expansive software and technology firm has been stellar. The future looks bright for Microsoft, with its market cap expected to grow another 50% over the next 3 years. With a P/E ratio of 27, it's still trading at a discount than Apple and Alphabet while having a more optimistic future growth path. Number 4. ExxonMobil. Exxon is the world's largest publicly traded oil producer by market capitalization and one of the most profitable companies in the United States. With a P/E ratio of 9, it has been beating the industry average over the past 5 years. Exxon is a pure play on oil prices, making it very sensitive to market fluctuations. However, with world energy demand expected to surge by 20% over the next 2 decades, this stock has strong long-term potential. Exxon is also investing heavily in alternative energy technologies. The company's CEO recently identified climate change as one of the biggest risks facing the oil industry, promoting it to take a leading role in developing carbon-neutral energy sources. Why should you invest in Exxon? Annual earnings of $78.24 billion. Exxon are one of the most valuable Standard & Poor's 500 and has been showing strong growth year on year. Although it's not a favorite among investors, its potential for further capital gains is significant. Exxon currently trades around $79 per share, which is a steal compared to where it traded more than a decade ago. Conclusion: Tesla, Advanced Micro Devices, Microsoft, and ExxonMobil are 5 stocks to watch in 2022. They have made tremendous strides over the past year and are poised to deliver strong performance for investors looking to get into tech stocks.